Where you get your money matters. When you're starting a company, you have several different options on how you finance your company, right? Categorically, two big categories are bootstrapping, and that's where you would largely have the finances just within your control, owned by you mostly, and it's your own money, basically. Let's just call bootstrapping your own money. Then you have external funding and financing options. And there's a broad variety of external funding. It could be venture capital money, it could be grants, could be bank loans, and other sorts of lending sort of options. I really think, from my experience, where you get your money is really driven, one, by the type of business that you are starting. If you are starting a services business where the financing of the product is already embedded because you are the product, whatever learning and education and experience and knowledge that you have is already within you. You are the product, you are selling you. Largely in a services business. Certainly there's exceptions where some services businesses also require a lot of equipment and other ancillary products and the like that can be extremely expensive. But from the perspective, at least from a cybersecurity perspective, if you're starting a cybersecurity services company, in most cases, the product is you, and you can start day one, almost day one, after some marketing, but day one being revenue generating. And that revenue and whatever amount of personal funds initially that you put in to pay the cost of registering your business or coming up with a name, getting a domain, purchasing a domain, getting a website set up, and just some of your ancillary marketing items. Beyond that, the money to build your business comes from the revenue that you earn. And bootstrapping is a lot more accessible for the average person that's not just coming money loaded from, family background or other sources. It's a lot more obtainable and reasonable to bootstrap when it's a services company, the product is you, and there's not a lot of upfront capital required to build a sort of product, right? So bootstrapping, largely when I did my services company, TCecure, it was through bootstrapping. I did get a small loan from a colleague, but very favorable interest terms, et cetera. And that was something that could be quickly and easily paid back. And that was just largely to have additional money in the bank in case clients didn't pay quick enough. And, certainly can go into a bit of that, but you definitely need to have some money in the bank to be able to pay yourself and also, and especially employees when you initially start out, because even if you can start generating revenue on day one and you invoice for that money from a services perspective, depending on your customer and the terms that you agree to. But generally speaking, you should plan for having to have enough cash on hand to handle your business for 60 days from the time that you start delivering services to a particular customer. That's just a rule of thumb that I have found very truthful and effective in starting. So that's bootstrapping and services. Now, if you move over to a product company, you are not the product. You're developing some sort of product to put in the market. The money to build that product needs to come from somewhere. Maybe you can build like a very a proof of concept or some sort of wireframe of it. But in order to build a product that will actually become what gets purchased by someone and be revenue generating, if you are the developer, you have those technical skills and you can build all of it. And even in that case, you typically need some sort of licenses, tech licenses, cloud subscription or other sorts of tools even to build that. You can start with the bootstrapping, but by the time you get to the place where it's time to really start bringing in customer and having real customer data in your system, unless, again, you're fully loaded from a financial perspective, money coming from, a rich uncle or a loaded mom, you're going to need some additional external funding. Now, some of that initial funding could be family and friends and people that are very well resourced, entrepreneurs. That is a common term that's used, family and friends. But that depends upon what kind of family and friends you have to do that kind of round, right? If you have relatives where they're coming to you asking for money, they don't have money to help you fund your venture, right? They certainly don't have disposable income to invest in a venture. And by its very nature, ventures are risky. They may not get their money back, right? So that's the other thing to consider when you're doing like family and friends, like who you're taking your money from. It needs to be very clear that you may not see this $5,000, $10,000, $25,000 back. Ventures are risky, right? Other sources of funding can include angel investors. Those are individuals, they're not necessarily institutions, but these are people that have a passion about certain areas. Maybe they're like really interested in cybersecurity because they were in cybersecurity for years and they have a certain amount of disposable income that they can invest in different ventures, right? Like, so those could be angel investors, and you can come up with terms with them on, how much equity they get in your company or not. You also have venture capital. These are typically institutions, and venture capitalists are looking for a return. They invest because they want a certain amount of return in a certain amount of time, right? If it's venture capital, 10x is normally just kind of a round figure that gets thrown around. You also have private equity, very similar to venture capital, but not quite the same. And there's still equity in your company, but a lot of times they would take a majority interest or stake in your company and provide you with a lot of different resources. You also have grants. I want to lean in on grants. This is money that is cash, that is not going to take equity out of your company. I would love to chat about some of the specific grants and that I got that are really beneficial in early building. So if you are interested in learning more about angels, venture capital, bootstrapping, government or non-government grants and government funding, SBIR, Small Business Innovation Research, I didn't mention that. That's another source of funding. If you're interested in talking about any of those, please do reach out. Tina Williams-Koroma on LinkedIn, direct message me. Also, you can reach out to our company on our socials, TCecure. You can find us on LinkedIn, Facebook, Instagram. And also, please do subscribe here because we have a lot more content coming to include whether or not you will have to use personal money to fund your venture. Stay tuned for that one.